In the late 1970s, China was one of the poorest countries on Earth, with an economy reduced to barter and subsistence farming. Today, it operates through hyper-modern coastal megacities that serve as the focal point of global trade. Beginning in 1978, the reforms led by Deng Xiaoping initiated a period of growth that pulled 800 million people out of extreme poverty. The percentage of the population living on less than $2 a day dropped from 88% to effectively zero in just 4 decades. China currently holds the world's second-largest economy by nominal GDP. Nominal GDP is the total market value of all goods and services produced within a country at current prices. However, when measured by purchasing power parity, or PPP, China is already number 1. PPP is an economic metric that compares what money can actually buy in different countries, accounting for the fact that a dollar goes further in some places than others. Standard economic theory suggests that only free, democratic markets can generate wealth at this scale. How did a centrally planned, single-party state build the world's most formidable production machine? China pioneered a model of party-state capitalism. In this system, market competition exists, but it is strictly bound by the political goals and oversight of the ruling party. This socialist market economy functions through 5-year plans. These are comprehensive government documents that detail national economic priorities and dictate exactly where capital and resources will be shifted. The government maintains control through state-owned enterprises, or SOEs. SOEs are companies where the government holds a controlling interest, allowing the state to dominate the commanding heights of the economy, sectors like energy, telecommunications, and finance. The boom years relied on a workforce of over 700 million people. By the early 2000s, this massive mobilization of labor allowed China to produce a quarter of the world's clothing and footwear, establishing a global dominance in consumer exports. This manufacturing volume is sustained by the world's largest trading network. Today, China's outbound trade is so massive that its industrial production exceeds that of the next 9 largest manufacturing nations combined. By combining global free trade with absolute domestic control over capital, the state ensured that the wealth generated by private labor always served the priorities of the central government. Recently, the state initiated a national pivot. They are moving away from the assembly of cheap toys and textiles toward a focus on dominating high-end industrial sectors and emerging technologies. Research indicates that China now leads the world in 37 of 44 critical technologies. This includes a near-total dominance in the production of electric batteries and the manufacturing of electric vehicles. To protect this industrial lead, factories are investing 2.6% of the national GDP into research and automation, using high-speed robotics to replace the cheap human labor that originally built the economy. This tech surge created a highly lucrative private sector, minting over 500 billionaires. However, the state has recently tightened regulations on these entrepreneurs to ensure their firms remain aligned with party objectives. This concentration of wealth at the top contrasts sharply with the scale of the 773 million-strong labor force. In these packed urban centers, the average worker faces rising costs and intense competition for a shrinking number of stable jobs. The shift from assembling consumer goods to designing 5G infrastructure and hypersonic missiles has redefined China's global role, but the sheer speed of this transition has placed immense pressure on the country's social fabric. The era of double-digit growth has ended. Official GDP targets have been downgraded as the economy hits a structural wall, with growth projected to fall toward 4% by 2027. A central cause is a $14 trillion debt pile. The real estate sector, which once drove growth, has seen a catastrophic bubble burst, leaving millions of apartment blocks as unfinished skeletal concrete shells. China also faces a demographic crisis. The population is aging so rapidly that the labor force is actively shrinking, placing an unprecedented strain on the state's ability to fund social services and pensions. For the next generation, the situation is even more dire. Independent estimates suggest youth unemployment may be as high as 46%, leading to a lying flat movement where young professionals simply retreat from the workforce in disillusionment. The same tools that drove the expansion of the last 40 years, massive state borrowing and relentless infrastructure construction have become the primary factors dragging the current economy down. Under General Secretary Xi Jinping, the government is prioritizing tighter political control and technological self-sufficiency over the pursuit of raw growth. General Secretary is the highest-ranking official within the Chinese Communist Party and the top leader of the state. The current leadership prioritizes absolute resilience and regime survival in a divided world, even if it means accepting a slower, more isolated economic future.